If you guys struggle to get consistent results with your trading, today I'm going to show you guys how I was able to make over $3,000 in one trade using my STIM trading model. So I'm going to break down the STIM trading model, the 4 steps to use it, and exactly how I executed and set my targets and risk for this trade. So without further ado, let's get right into it. So STIM stands for sweep, tap, inversion, momentum. These are the 4 things I look for before entering any trade. So let me help you guys visualize it. Let's do an example for longs. So say you have a swing low right here. What you want to see is you want to see a sweep, right? So you want to see a liquidity sweep. That's the first step. Now, ideally, this swing low is inside or close to some type of bullish fair value gap on the higher time frame, which means that when you sweep that liquidity out, you're also delivering now off of a higher time frame fair value gap. Now, you can also use order blocks. I prefer fair value gaps. Then, on this leg down, when you swept liquidity, you want to look on the lower time frames and see if there's a bearish fair value gap, okay? Because you made this leg down to sweep liquidity, so you want to see some type of bearish gap. And then once you start delivering off of this higher time frame bullish gap after having swept out a significant swing low or batch of relative equal lows, you want to see an inversion. Now, an inversion of a fair value gap is basically just you're closing back above it, you're disrespecting it. And once again, momentum. You just want to see good momentum while this is happening. So a V shape can be a good parameter, or maybe you have something like this where you consolidate for a bit down here after sweeping liquidity, and then you get a very aggressive spike up and you invert. That's kind of what happened today. So we'll get into the exact example, but those are the 4 steps: sweep, tap, inversion, momentum. Those 4 things. Write it down, put it on a checklist in front of you. So today I took longs on this exact candle. My entry time frame was the 5-minute chart, and let's get into everything that led up to this trade, why I entered, and all that stuff. So the first thing, we had this batch of relative equal lows, okay? So we had swing lows here that had not been taken. We had a swing low here that had not been taken, and this one was very important because this was a 10 a.m. data wick. Now, I've made a video about draws and liquidity. You can watch that after this one, but this was a data wick. It was basically a wick that happened after the JOLTS job openings report came out at 10 a.m. Throughout the day, we had not taken that out until we dumped down here. And then obviously this low from the AM session low, and we took all of these out at once when we made this move down. Okay, so now I'm on very high alert because this was all the liquidity that market wanted to take out and trade down to. And I knew once we hit that, we probably had no business trading much farther down, okay? That's the first step. You got to recognize liquidity, where the market wants to move. And the other thing that was very important about this trade, if you go to the higher time frame, and this is the T, the tap, we were trading inside of a bullish fair value gap on the NQ 4-hour chart. So if you see right here, yes, we traded below it for a little bit, but we never actually closed below it and inverted it. So this is why it's very important to have your 4-hour or whatever higher time frame gap you're watching side by side with your entry time frame, which for me was the 5-minute chart. And I'll kind of explain why right now. Because right here, if you go on the 5-minute chart, you can see that this candle is trading under this bullish 4-hour gap. So you might think, oh, did we invert the 4-hour gap? No. It would have only inverted this 4-hour bullish gap if it was 2 p.m. exactly when we closed below, because that's at 2 p.m. Eastern is when the 4-hour candle closes. But we never closed a 4-hour candle below this bullish gap, so we were very much respecting it, which is why when price started to curl up like this, I was still on watch for longs because we never inverted the higher time frame gap, and we were starting to make a recovery back above these swing lows that we swept from the morning, okay? So now let's go back. We know that that 4-hour bullish fair value gap is there and that it's being held and that it's being respected, right? We have that context. So now we'll just delete these drawings and show you guys the exact time I entered and why. So you know that we had this, right? We swept that out. And now, as you can see, this is the I, the inversion. We have this bearish fair value gap that we make on the way down, and we start to come back up, and boom, we invert it. We close above it. This is very bullish, right? Because now price is curling back up. We've recovered back into this range, and I entered this trade. I went long right here. Now, there's a very key part of this strategy. You don't just want to long because you have a setup like this. It looks very good, but you also want to have a valid reason for the market to go up, right? You can long when you get some confluences in your favor, but if you don't have a good reason to say, why would the market go up here, then it's not really worth longing. Now, in this exact scenario, we had these 2 swing highs right here, right? And they're very important. These are relative equal highs. Not only are they relative equal highs, but they are relative equal highs inside of a bearish fair value gap. Because if you go to the 15-minute chart, you can see right here, we have a bearish fair value gap and we have relative equal highs inside of it. That makes these a very good target. Now, I've talked about how good of a draw on liquidity highs, I call them imbalance highs and lows, especially when it's a set of them, right? These are imbalance highs and lows, meaning they're highs and lows inside a fair value gap. That's going to be a very good draw on liquidity. It almost always pans out for me when I target these. They are very strong draws on liquidity. Market often wants to come back up, resolve these, and then either trade lower or maybe just invert. But it's often going to be an absolute magnet for liquidity, the imbalance highs and lows. Now, what makes this a good draw on liquidity? Because there was a scenario here where it might not have been, and I'll explain that, okay? So see how this high is lower than this one, meaning there's a collection of stops in this area? Well, really quickly, if this candle right here had had a wick like this, and we had taken out this previous high, then it no longer would have been a good draw on liquidity, because this right here would have been the run on stops. Since this candle never took out this high, both of them remain now a very good draw on liquidity. And so once again, I entered right here with that target in mind, because once again, why enter a directional trade if you don't have a good target in mind, if you don't have a good reason for market to trade up on a long, if you don't have a good reason for market to trade down on a short? That is the key that most people miss. People will focus too much on the setup. They'll say, oh, my setup just occurred. But they'll forget and miss the fact that, why am I trying to trade up there? Why would market want to trade up there? Well, to resolve these highs and take out some of them inside this imbalance. So you always need to understand draws and liquidity. I have a video on it. You need a draw on liquidity in the opposing direction to want to take a trade. In my opinion, that's when you get the highest probability setups. So once again, I entered right here. I would say this is pretty good momentum, right? We closed near the highs of this 5-minute candle. When we inverted, we had an impulse move up here. So not only have we inverted this gap, but now we have a bullish fair value gap from the previous move up, also giving us directional support here. So once I enter, my full risk reward on this trade, as I had it mapped out, was something like this. Okay, so we would stop out on a close below this fair value gap, because if we invert back down here, then I'm thinking, okay, we're probably bearish. Maybe this wants to get run later. My target, like I said, is going to be these relative equal highs inside the gap. And that's about a 3-to-1 risk reward trade. And as you can see, it ended up panning out very well. So we'll go and kind of talk about how I navigated once I was in the trade. So if you just play the whole thing, boom, we zoom right up to our target, but it's not as simple as that, because not every trade zooms right up to your target. So yes, I'm recapping a trade that went very well, but I'm going to show you guys how I manage risk once I'm inside a trade. So the first thing right here, at this internal high, once again, what is this? I just explained it with these relative equal highs right here. This is an imbalance high. Why? Because it's a swing high inside of a bearish fair value gap. So my first move is to set my stop loss to break even immediately once we hit this level. Now, once again, I'm just letting this ride, right? And I have my stop loss on a close below this gap. But once we get up here, immediately I have my stop to break even, and we'll use this red line right here as my stop loss so you guys can visualize, right? So right here is my stop loss, and the second that we hit this internal high, this swing high, just go there. Okay, so right on this candle, right here, I set my stop to break even, this red line. That's my hypothetical stop. The reason why, once again, is because a lot of times market likes to trade up to this and then maybe reverse, okay? Because it's a high inside a gap. It's just a draw on liquidity. For the same reason I'm targeting these highs up here, I just have to be careful and manage my risk once I get to this one right here. So luckily, this didn't end up presenting us any type of pullback. We actually just ran right through it, but a lot of times that's not going to happen. And so in many trades that look just like this, where I have a great draw on liquidity, you don't get the instant play out that you're looking for. So for that reason, I set my stop to break even. But this time we did, so we zoom right back up. Now, my second move, I take profit on half of my position the second I get right here. So I take half my position off the table the second we get to this blue line. Why did I do that? Why didn't I wait for the full position here? Well, it's very simple. I'm going to give you guys a second to pause and think about it. If your answer was that we had hit a bearish fair value gap, you are correct. Once we got right to this bearish fair value gap, just to be precautionary, I took half my position off the table. Now, also, it was basically 3:50 Eastern at this time. I usually don't take trades in the late afternoon, but today I didn't see much that I liked in the morning, and this afternoon setup was actually really good. I loved it, so I took it. But usually I don't take trades in the afternoon, but like I said, it was nearing the end of the day. That was one reason. And also, we're just nearing a bearish fair value gap. And once again, sometimes you're not going to get a perfect move. This was a pretty perfect move, but sometimes you're going to have something like this where you trade into it and then you get a rejection. And you're going to feel dumb if you don't take any of your profit, especially because at this point, we're already at 2-to-1 plus. So I took partials there with no concern. And once again, once we hit this, I had set my stop to break even. And then finally, lo and behold, after not much waiting, actually, we end up hitting our final target, these relative equal highs inside of the bearish gap, and I am done for the day. It was basically the only full-size trade I took, and it ended up panning out very well. So once again, why did I take this? What did I do to make it easier on myself once I got in? So first of all, we had this clump of relative equal lows from the morning, and we swept it all out, okay? So right here, we sweep it out, and I'm immediately looking for longs when I see any sign of a reversal. Now, the reason I was so confident in looking for longs is because not only have we swept out lows, but we were trading inside of a bullish 4-hour gap on NQ. Right here, once we've swept sell side and inverted this bearish gap, I'm going to take my longs and target this obvious set of relative equal highs inside of the higher time frame bearish gap right here, which was evident on the 15-minute chart. And that's where you have to be looking at multiple time frames and scanning things constantly, paying close attention. And then once we entered these longs right here, you end up letting it play out, and boom, you hit the target very quickly. And once again, I had set my stop to break even once we hit this internal imbalance high, but we never ended up rejecting, and we just mooned straight up to the target. So sweep, we had tapped into a higher time frame gap. We get the inversion right here, and it's on good momentum, right? Several green candles in a row, nice impulsive move. I feel great about taking this. So we do, and it pans out. So with that being said, if you want to learn more about my strategy, watch my other videos, like, subscribe, all that stuff. I make educational content all the time. And if you're interested in trading with me, join my free Discord. It's completely free. No credit card, no email, no nothing. Literally just join. It's linked to my YouTube bio. Click the link. You are in the Discord. And yeah, communicate with me, ask me questions, be part of the community and all that stuff. So with that being said, I appreciate you all for watching. Catch you in the next one. Peace.